It's a financial battle with a digital twist. On one side, users of the social media website Reddit. On the other, billion-dollar hedge funds. So basically, a group of anonymous amateur investors have joined forces to drive up the stocks of Gamestop, which has been described as the blockbuster video of the video game industry. They did it to take on Wall Street's titans through a process called shorting. These Redditors were annoyed that hedge funds had shorted GameStop so much that it might force the company into bankruptcy. Shorting is essentially betting that a share price will fall. And if you've seen the movie The Big Short, you'll know the practice is routinely used by big hedge funds to profit from the declining fortunes of overvalued or overhyped companies.
You want to bet against the housing market? This is Wall Street, Dr. Burry. If you offer us free money, we are going to take it.
Some people argue that shorting is good as it helps to keep companies honest about their future prospects. But many have labelled the practice unethical, arguing hedge funds routinely abuse their market power to talk down a shorted company's prospects and make a quick buck out of it. There's no suggestion it happened in this case. Rather, the short sellers probably thought that due to video game sales moving almost exclusively online, GameStop was unlikely to recover its market position. In a Reddit forum called Wall Street Bets, retail investors became incensed about the amount of money that was being made by extremely wealthy investors through shorting. So they decided to launch an experiment. If they could drive up the share price of a shorted company through mass investing, they could cause the funds to lose a lot of money. And if the trend caught on, those retail investors who got in early could make a lot of money. And so far, it's worked. The most prominent user to buy in early we'll call DFV. Their initial stock investment of $50,000 ballooned to almost $50 million in weeks. And the whole debacle has left market experts scratching their heads.
Unfortunately, it's a little like a Ponzi scheme.
You don't want them triggering irrational results.
There's calls for regulators to do something about it.
My guess would be, and I couldn't prove it, is that big, long-biased manipulating institutions are behind this.
Australia hasn't been immune from this GameStop frenzy. A small nickel and cobalt miner called GME Resources jumped as much as 53% in a day, simply because it had the same stock code as GameStop. It all goes to show the appetite of Australian investors to potentially win big from trading trends. In the US, market liberalism is a big part of the national psyche, with political battles waged over the merits of deregulation. In Australia, we have a market regulator that regularly questions companies whenever there's a big movement in their share price. So those 1,000% gains in ASX companies are less likely to happen, and your rags to riches in weeks story is more a dream than reality.